Hi, everybody. Welcome to part 2 of our 1031 exchange series. Again, I'm Margot Weatherford. I'm a real estate broker with eXp Realty in North Carolina, South Carolina, and also in Georgia. In our first video on 1031 exchanges, we discussed some basic terms so that you could become comfortable with the process and some of those terms that are going to be used and necessary in your next 1031 exchange. In this video, I'd like to talk about qualifications for an exchange property. So when you are looking to do a 1031 exchange and you have identified the property that you would like to replace your relinquished property with, so the property or properties that you're going to purchase, you have 45 days to identify that property or those properties, and then you have 180 days to close on those properties. And again, this is 45 days from the closing of the relinquished property, and then 180 days from the closing of the relinquished property. So of course, at that time, your qualified intermediary is holding the proceeds from the sale of the relinquished property. And the only requirement are just those two timelines, so 45 and then 180 days. Qualifications for a 1031 exchange. IRS tax code says it just needs to be a like-kind property. So really what that means is exchanging real estate for real estate. It needs to be real property. It cannot be a trade that's going into the stock market. It cannot be a business maybe that you have interest in. It cannot be for investment purposes other than real estate investment. The replacement property can be a rental. It can be raw land. It could be a farm, office space, motel, hotel. It could be industrial. Not eligible properties for 1031 exchange include flips. It includes interest in a partnership or personal use properties. And those personal use properties are either your primary home or a vacation home that you own. Now, you can purchase with a 1031 exchange a vacation property. However, there are some rules around it, and I'm going to share those rules with you. And I'm going to preface this with, please speak to your CPA or tax advisor to be sure that you can do this. So you can exchange and identify a replacement property that's going to be a vacation home if you have you're renting it 14 days out of the year, and then of course you are holding it for 24 months or more. So if you rent it, you can rent it to a family member at fair market value, but you have to rent it for 14 days out of the year. So that is your opportunity to buy a vacation property. Again, please consult your tax advisor on that. So the beautiful thing about the qualifications for your replacement property with a 1031 exchange are that it's very open as to the types of investment properties that you can invest in. Some of the reasons that you, as an investor, may want to relinquish a property and then exchange those proceeds into another property are really several fold. So one reason would be higher cash flow. Let's say that you have a single family home that you rent out. You're making $2,000 a month, and you have an opportunity to take the equity that you've gained in that single family home, do a 1031 into 3 duplexes, and start cash flowing $5,000 a month immediately. Of course, run your numbers, but that could be a good opportunity for you. Second reason would be easier management. So if you have a single family home or you have a portfolio of single family homes, perhaps you'd like to sell those properties and roll those proceeds into a larger commercial building where you don't have a rental portfolio of 30 properties that have to be managed. You just have 1 or 2 large commercial buildings that you own. And maybe at that point you can afford full-time property management as well. Another reason would be for diversification. So I actually have a client who sold an investment property in Wilmington, North Carolina, and he had never heard of a 1031. We introduced him to this opportunity. It worked well for him, and he exchanged and replaced that property with another property that was in the state of Maine. So there are no bounds in the United States on regions that you can purchase property. You can do it anywhere in the US, and you can also purchase different types of assets. So it gives you an opportunity to reposition your equity and potentially, allow yourself to make smarter investments as it relates to your real estate holdings.